Cathie Wood, a long-standing backer of Elon Musk's Tesla Incorporated, complimented him on Twitter's acquisition, saying it will allow the website to reach its full potential. However, Wood's technological wagers have not received as much backing since the acquisition. After cutting ARK's stake in the social media network from 5.3% of the fund at year's end to 1.7% on April 1st, the business day before Musk announced he had become Twitter's top shareholder, Wood also lost out on some of the platform's gains, or had liquidated all of its Twitter holdings by the middle of February. Well, when asked if ARK will buy Twitter right away, a spokeswoman said the company doesn't comment on day-to-day operations. Why does Wood think that Tesla's stock will benefit from Elon Musk's takeover of Twitter? To find out, keep watching. Elon Musk, the CEO of Tesla and self-dubbed Techno King, became the largest shareholder in Twitter earlier this month when he purchased a 9.2% stake in the firm. As a result, Twitter shares fell 4.83 to $47.01 on Wall Street. As Musk is ready to use Tesla's equity as collateral for a loan to fund the takeover, the company's stock has dropped 10 in the last 2 days. According to Musk, Twitter serves as the virtual town square where important discussions about the future of mankind are held, and free speech is the cornerstone of a robust democracy. He has so assumed the responsibility of putting things right. Earlier this year, prominent stock investor and ARK Investment CEO Cathie Wood expressed similar concerns about Twitter, saying that the employer's faith in the company was somewhat undermined by some of the censorship issues and discussions. Furthermore, she hinted that the platform's advertising strategy might not be the most effective. Tesla is the biggest holding in Wood's ARK Innovation and ARK Next Generation Internet at ETFs. Increased interest rates have already caused pressure on the firm's innovation funds, as they have substantially impacted growth stock prices. The fact that Wood recently sold a sizable portion of his Twitter stock this year struck us as intriguing. Shares of Twitter's ARK Fintech Innovation ETF, ARK Innovation ETF, and ARK Next Generation Internet ETF were sold by Cathie Wood's ARK. These days, the Fintech Innovation ETF with just over 300,000 shares, and the ARK Next Generation Internet ETF with slightly over 1 million shares own Twitter. This occurs after Cathie Wood sold more than 90 of her equity stake in the company throughout the previous several months, even after Elon Musk turned down a position on the board of directors of the microblogging platform ARK ETFs, still selling Twitter shares. More than $8.07 million worth of shares have been sold by Cathie Wood's ARK this far. Because ARK's holdings in Twitter saw a sharp decrease, Wood's ETFs were not part of the quick rise that followed Elon Musk's admittance into the company. The stock had surged 27 and reached 3-month highs close to $55 when Elon Musk revealed earlier this month that he had bought a share in the company. The price has since dropped back to about $47. Even though Elon Musk is the company's largest shareholder, he has refused to join Twitter's board of directors, which hasn't stopped Cathie Wood from selling Twitter stock like crazy. Yesterday, the news was globally announced by Parag Agrawal, the executive behind the social media platform. Elon Musk's appointment was reportedly reviewed by the board last week, and Agrawal claims that he was supposed to start serving on the board this Saturday. Musk, on the other hand, made his decision to leave the board known the same day. This occurs just a week after Musk assumed the position and made a commitment to greatly improve Twitter over the ensuing months. According to a report made on April 4th with the Securities and Exchange Commission, Musk paid almost $3 billion for a 9.2% stake in Twitter, making him the company's largest shareholder. He then joined the board of directors after that. Elon Musk has nevertheless resigned from the Twitter board of directors. Elon Musk will continue to have the largest single shareholder position in Twitter even after he decided not to join the board of directors. By the end of November, Wood had already made a sizable investment in Twitter following the departure of then CEO Jack Dorsey. $49 million worth of shares were acquired by ARK. Wood thinks Musk, the ultimate disruptor, has the power to restructure Twitter's board of directors. Despite the fact that she has decreased ARK's stakes on the social media platform, she suggested that this might be setting up for another change in leadership last week on Bloomberg Radio. What relevance does this have to Tesla shares then? Musk may face time constraints because it seems that he wants a great deal of control over the company's operations. Cathie Wood seemed to think that he is capable of striking a balance. Rather, she suggests that Tesla will benefit from Elon's takeover. Stock prices have frequently increased in response to Musk's tweets due to his devoted fan base. Several analysts claim that Elon Musk and Tesla's stock are closely related in a way that other CEOs and businesses are not. Even though Tesla was experiencing manufacturing problems that would have caused the stock price of any other company to drop, Elon Musk's faith was sufficient to keep the company's stock afloat. Musk's mere hint of a fresh notion has caused the stock to rise. Despite the lack of specific monetization plans, over time, it seems that Musk's ideas and charm will be sufficient to maintain the rise in the price of Tesla shares. This is hardly surprising, particularly in an industry where businesses and their CEOs like Apple and Steve Jobs seem to go hand in hand. Musk is a highly prosperous businessman as well. Prior to joining Tesla, he served as CEO of PayPal. Currently, he serves as both CEO and chairman of Tesla. Wood says he may use the platform that he bought. However, not everybody feels that way. People appear divided. On the one hand, they fear that Tesla would suffer as a result of this action. However, investors appear to be bullish. Analyst Roger Kay of Endpoint Technologies Associates believes that Tesla's stock price is expected to recover quickly and will not likely suffer long-term harm. The financial expert clarified that Twitter's status as a well-established firm makes it an intriguing dilemma, since the platform has already shown to be successful. Kay claims it is not so much a matter of making it even more successful. All he's doing is using Twitter as a loudspeaker. Musk's idea of leveraging Twitter as a platform fits in with what we've already said about Elon's tweets' impact on Tesla shares. Musk claims to support free speech, but a more realistic interpretation would be that he wants no limitations on the information that he is able to share. The sharp decline in Tesla stock price could be attributed to political resentment of Musk's most recent foray into the social media sphere. On the other hand, we think Tesla is in a very good position going forward. Tesla Incorporated has been a stock market monster over the previous 5 years, with cumulative gains of 1,600, nearly 20 times higher than the 500. Optimistic Wall Street expert predicted that the electric vehicle maker's stock might hit $1,580. But nobody seems to be as optimistic about Tesla as ARK Innovation's Cathie Wood. The portfolio manager projects that for the next 5 years, the stock price will rise to $4,600 by 2026. This would mean annual gains of almost 40 and a cumulative return of 300. Wood has routinely forecast that Tesla will do better than the market. And the EV manufacturer has not let her down yet. Some say that Cathie Wood is well recognized for being an excessively bullish growth investor. As she stated in a recent CNBC interview that ARK Innovation will soon generate 50 yearly gains despite challenges from inflation and interest rates. With a 38 ED loss, ARK has had a challenging start to the year. Despite outperforming other growth equities, Tesla shares has already dropped 14 in 2022. ARK ETFs have seen a value loss of 8 to 25 this year. However, Elon Musk and his team have a track record of captivating analysts and investors. In spite of the difficult macroeconomic environment, ARK might be able to break the impasse, regain momentum, and move closer to Cathie Wood's ambitious long-term objectives if this occurs soon. According to Cathie Wood, until 2026, ARK Innovation will increase at a pace of 50 annually, whereas Tesla stock will expand at a rate of about 40 annually. Furthermore, she feels that Musk's acquisition of Twitter will only increase the potential for even greater success for Tesla stock. Do you share Cathie Wood's opinion? Please leave a comment below.